we're focusing on our female investors today, and obviously we have to talk about gold. And the interesting thing about gold is that while there are a lot of men who do the commodity exchange and the commodity trade, women prefer to gather gold for the future. So we're talking to investors who are putting together a kitty, and a lot of the women we talk to are saving maybe for their children or for a wedding in the family 15, 20 years down the line. Let's find out how you can optimize that investment and give you the most efficient way to put together that gold. Let me bring in Dhirendra Kumar, CEO of Value Research, who joins us now to help us with that investment. Dhirendra, given the fact that gold has had a rough year, if we look at the one-year returns, the Nifty has given about 18.5% as of today. Gold has fallen 9.5%. Now there's a new import duty that's been hiked up to 8%. Is it a good time for us to buy gold if we're looking at long-term investments, or should we be waiting?
Depends, what is your objective. If you're thinking of gold as an investment, then it is not a good time to invest because the rough times might prevail. And anyway, gold is not a great investment for a very long term. Last 4 or 5 years it has done well. But if you need to, acquire gold for which you need in 10, 15 years or longer for consumption, then maybe, stagger your purchases. This could be a good time, and but don't buy all that you need today.
All right, so if we're staggering our investments, Dhirendra, there are several ways to buy gold. We could buy jewelry, we could buy coins, we could buy ETFs or gold funds. Now, for a long-term investor with the hope of buying jewelry in the future, what's the best way to put together that sum of money?
I would suggest that, if you're saving small amounts for, acquiring jewelry at a future date, which is few years away or many years away, then I would suggest that, consider buying gold ETF. Effectively, you are de-risking yourself from any big spike that can happen, and you can methodically save small amounts in gold ETF and exchange those gold ETF accumulation into gold jewelry at a future date of your choosing. So gold ETF might be the best way and the most liquid way and the most cost effective way to save small amounts at the same time, riding being on the gold price curve.
All right, so gold ETFs are the most efficient way. Now remember, the gold ETFs are largely identical because they function the same way and they all have the same underlying asset. So make sure you take a very close look at the size of the fund and its cost ratio when you pick that fund to invest in. We have a question, Dhirendra, from a female investor. Suvarna is a 45-year-old single woman who lives in Bangalore. She's accumulated 20 lakh rupees in her equity mutual funds through SIPs in the last 6 years. She also has 7 lakh rupees invested in a debt investment, giving her 8.25%. She's going to need all of this money in 5 years, she assumes. So should she revise her portfolio? It's an impressive kitty to put together for a single woman, so we congratulate her on her investments. But going forward for the next 5 years, what should she do?
If you're likely to need all this money in next 5 years, I would say that you need to really you have chosen good funds, but you need to turn a little conservative with your allocation. So from that point of view, I would suggest that gradually move your money. In next 2 years, move all this 20 lakh rupee accumulation in these equity funds into respective balanced funds. Maybe you should consider a stable growth portfolio, the 4 balanced funds. Effectively, you get these funds plus a 30% allocation and automatic rebalancing, treatment of all your investment appreciation as equity, which is tax-free.